back. For the markets, as we pointed out, we've come off a bit from the high point of the day, close to about 25 odd points, but still holding up in the green. The stock on our radar right now is Escorts. Bharat Madan, the group financial controller at Escorts, joins in on the phone line. Good morning, Mr. Madan, and thanks for joining in. While the company's performance still looks dismal on a year-on-year basis, what stands out is that the performance has improved on a sequential basis. Can we expect an improvement on a quarter-on-quarter basis to continue, and if yes, by how much?
Yeah, good morning, Nima. Now, the quarter has been good sequentially, but the industry has been below expectation in the last quarter. So we saw a 22% decline in the industry, and the trend has not changed in January, what we saw. And we expect February also is going the same way. But I think the March quarter typically is a slightly lower quarter compared to the December quarter. So we don't expect volumes to really shoot up in this quarter. But yes, the improvements, whatever have been initiatives have been taken by the company on the cost side, they have been bearing fruit. So we expect the results will improve, but the volume will be one of the key which we need to watch out for.
Okay, Mr. Madan, what exactly is the parameter that impacts tractor demand? Was it because of the subpar monsoon that you saw tractor demand falling, and therefore can we expect FY16 to be a better year if the monsoons oblige, or is it a deeper rural downturn?
And there are 2-3 factors. One obviously was the lower monsoon which was there last year, and because of that the lower crop yield has been one of the factors, and the crop prices are another dampener which is actually impacted because of the food inflation going down, which is very strong correlation to the tractor demand. So that is what is actually impacted the industry adversely. And because of that factor, the delinquencies in the financing sector are also going up, which is another reason of concern for us. But going forward, the expectation is good. The monsoon prediction, what we are hearing now is of a normal monsoon prediction for this year, sounds good for the industry. And this type, the Rabi crop is also expected to be a record crop. So let's see, we're keeping our fingers crossed.
Okay, so in the 9 months of this fiscal year, the company's revenues have actually fallen by about 3 to 4%. Do you expect FY16 to be a growth year on your top line, and if yes, by how much?
Well, if you look at the tractor side, we do not expect any major change to happen on the top line front because of the industry. So I think first 6 months industry is more or less expected to be flat or slightly on the lower side. The only recovery after the monsoon we expecting will happen probably in the second half. Though on the construction side, we are very bullish and we are hopeful the revival in the infrastructure sector actually will push the demand. So we're expecting the top line to grow on the construction side definitely.
Okay. You admitted that sequentially you have done well both in construction equipment and in tractor. So let me first speak about tractor. You don't think you bottomed out, in the previous quarter, in the second quarter or the first quarter? You think that the slowdown could persist?
Yeah, because we saw January, which also saw a 30% decline in industry. So having said that, in February is also not looking very bright. So I think the downturn still continues. We expect the revival to start happening from March, but there's some festive season which is getting preponed to March. So we expect the revival likely will start happening from the March onwards.
Okay. What about the construction equipment segment that also sequentially has shown a growth of 7.2%? Is that looking more sustainable?
Yes, so construction has been one positive factor for us in this quarter. So we've seen a turnaround happening in that business. And this coupled with the very good product mix, the price increases which we have taken, and some uptrend which we've seen happening on the volume side. So that's one positive I think we expect will continue, and we hope to be in black in next quarter on the construction business.
Okay. What can you help us with on your margins going ahead? From the previous quarter's 3.4%, you've improved it to 4.7%. Can they improve going ahead?
So like I said, a lot depends on the volume. So this quarter we are not expecting any major volume jump to happen because normally March quarter is a low industry overall. But going forward, I think next year's the way things are and whatever cost initiatives the company has taken, we expect the improvement in margin will happen in FY16.
Okay, one more question. In your press release, you indicated that the domestic tractor industry was flat sequentially, but the company posted a 9.5% jump in the domestic tractor volumes. Does that mean your market share has gone up? And if yes, where does it currently stand at?
Yes, the market share this quarter has gone up to 10.9%. So it was 10.4% last year. So it's shown a 0.5% improvement in this quarter.
Okay. Do you expect finance costs act as a burden to decrease in the coming quarters?
Yeah, so as the profitability improves, we expect the finance costs will actually go down. And there's been a trend we've been saying in the last almost one and a half years now. So overall, I think we're expecting the cost will continue to go down.
Okay. All right, we'll leave it at that. Thank you very much, Bharat Madan, for joining us with those details. That's not a very encouraging conversation. Sequentially, third quarter did look better than second quarter, but the company doesn't expect that the fourth quarter will persist with that improvement. If anything, tractor sales appear to have fallen. We'll take a break on that note. Very soon, ADRs of over 60 Indian companies may start trading in the over-the-counter market in the United States.